All right, all right, all right. This is David, and good Tuesday rainy morning. Have a little coffee with you folks today. Um, so let's take a quick look, shall we? Think, what are we saying? Stock futures rise more than 1% following relief rally. All right, cool. We got the relief rally. This is interesting. Manhattan apartment sales fall. I think we talked about it before, but people are kind of considering Manhattan uninvestable. Uninvestable, ladies and germies. So interesting. Oh, just lost my frame of thought. Okay, I'm back. So yeah, that's pretty scary, man. That's pretty scary. And then you see that there are certain cracks in England's real estate market. So the feds are beating the shit out of the economy, man. And I think recession is not unlikely. And I'm largely, I've moved to cash. I'm trying to buy some things long term, cheap, but everything I was up in, I kind of took it. Got good prices. We'll see how that lays out for me. But I'm moving to cash and looking to re-enter cheap. I still think that 3,300 is a good number. And if we hit that, I could see lower numbers if we get some sort of major debacle. I'm just waiting for this bozo to drop a couple of nukes on the Ukraine forces. I think that ought to send us into chaos. And then North Korea, they're firing missiles over Japan. They expect that in November during the primaries or midterms, that North Korea should test a nuclear weapon. And you have the Chinese sometime between the Chinese elections and our midterms. They expect them to set it off. So yeah, interesting times, man. These I don't know why they let these guys linger. I mean, we supported China. Yeah, we raised Al Qaeda. We supported China. China's gonna crush us. We got behind Russia and worked with them while they were fucking around. Can't really say while they were building their economy because they didn't do much. But Europe went ahead and gave these guys the power by just locking themselves in with oil. And you know, we're the largest. We could be the largest producer of oil in the world, but we tied the hands of that industry. I mean, you know, where's the strategic thought? You know what I mean? I want to protect the environment also. That's very important to me. But, I mean, you have to be smart about it, man. And you got to figure if you're walking down that path, countries that depend on fossil fuels for, for their strength and economy are going to make their moves now while they can. You know, if it's inevitability that fossil fuels fall to the wayside, I mean, they're going to try to protect their interest. I bet that's what their move into Russia is all about, into Ukraine. You know, they want the resources, they want the agriculture industry, the manufacturing industry. You know, they want to secure their future as oil dwindles. But yet, you know, they don't see that. I mean, and these are the people that we hire to run our country. No forethought. So we invest ourselves into this mess, and it's our own dollars we're fighting. You know, I mean, why didn't they take this fucking North Korea out before he was armed up? You know, once he starts making threats and getting out of line, just say, yo, you can't be trusted, bro. You can't be trusted in our world. Fucking eliminate them. Give it all to South Korea. Koreans are great people. I don't know, a lot of you folks who live in suburbs or rural communities may not get that exposure, but in New York, really big Korean communities, really good, hardworking people, great restaurants, and a lot of them very religious, God fearing. Some kind of fucking religious fanatics also. It's like the Hare Krishnas or something got a hold of Koreans and made them crazy religious. But either way, I mean, great people, beautiful women, and yeah, just really good restaurants, good community people. I mean, to have a whole country of South Koreans, or just Korea, all the culture of South Korea would be a bright spot in the world. So, fucking get rid of this yo-yo. All right. Anyway, that's my wise guy upbringing. So let me pack that ignorance away, and let's look at what we got going on. Feds. Jeez. Jolts is big doings, and more Feds and API. What I really got my eye on is Friday's non-farm. And yeah, I don't know if this rally is short covering. That was pretty aggressive sell-off. It's a pretty aggressive move right there. And we're looking at the futures on the daily. So I guess we're here already, so we'll do that. That's what the news was. So yeah, I mean, look, that's a crazy sell-off, man. Crazy sell-off. We got a little retrace here, and it continued down. Making the trend, lower lows, lower highs. So if we go right to from the high to the low, a retrace would be around 39 honeys. And I'm thinking maybe not. If we're truly at a bottom, we're going to want to make a double bottom, right? A legit double bottom, we won't get a retrace past 33%. Well, we shouldn't. And then if we do go past 33%, then I wouldn't consider that a double bottom. That's making a new bottom. That's my thinking of it. I'm sorry, I'm quiet. I'm thinking that's a good number too, man. Like I got that. Yeah. So what are we talking about right now? We got 740, 826. So we're talking another 80 points. We're already up 50 today, right? Yep, we're up 55. Double nickel. We're double nickel in it today. Another day of this. Wednesday, Thursday we taper out. I'm thinking 38.26 is a good number. Is what I'm thinking. Might even take us till Thursday, right? We're already looking at today's rebound. Yesterday was the first up day. Today, Thursday will be 4 up days. That'll coincide. Friday takes the number out, and kaplunk. That's what I'm feeling. So based on today, I mean, really, we're just looking. I mean, the market's pushing up. It's another up day, very strong bar. Yeah, your bias has to be bearish, right? I don't know what the value of the day is, if we're oversold, overbought or not. But yesterday we just moved into fair value from being oversold. So I would imagine that we're going to continue this grind. Where is that chart? I'm looking at it right now. Yeah, we just tipped into fair value on the S&P. Up another 55. We're talking like 730. Yeah, we're just delving into the realm. Yeah, we're going to challenge the high of 928. That's all we're doing right now. There's a wee bit of a gap. 757. I'm looking at the S&P itself. 757. So we're opening at 739. Another 20 points. 50. Another 70-point day. Yep. I say our target's probably 757 today. Hit the target right on the head yesterday, but got chopped out and didn't make any fucking money on it. I think I made like 200 a contract. Net. Took a shitload of trades too. So yeah, 357. So let's see. Let's drop down. Look at that 240 and see if we got anything in the mix. All right, you got a bull flag set. Look at that. Boom, 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 boom. That's strong, man. You got a bull flag setting up. You might be able to take that flag. It's the first flag in this 240-minute run. So, yeah, you know, there could still be energy in this bad boy. We drop down to 30. That's too soon. What time is it? It's 6 o'clock. So nobody's really going to get any benefit out of that. The 60 minutes build in a flag also, but 1, 2, 3, 4. Hitting a little resistance right here. I'm gonna watch the open, see what happens, see what I can get myself into. If I see anything real sweet setting up. So that's a yes. Let's just roll down the line and I'll get you guys out of here. BTC, obviously it's, well, not obvious, huh? The only entry I see is on the 60-minute, watching the break of this double top right here. And let's expand that and see what that does for us. Yeah, there's a lot of chop in here. That's the problem. The problemo. It's going to be a hard fight to get through that mess right there. But once you bust through that, once you break that 359, you have some cool running going on. I'd say the next resistance is going to be around 21 from there. So I might keep an eye on that. That might be something we could look at as an entry. About 2208. We'll take a peek back once we go live later on. Oil. What's oil doing? Should be grinding its way up. Putting in a little bottom. Looks like a head and shoulders. I just need a little retrace to give me a pivot. Or you can call that a pivot and say that it already broke its head and shoulders, which is more probable. It's a cheesy head and shoulder. But you can see the change in trend. Shoulder, head. You can call this a higher low, broke to a higher high. Just, you know, based on OPEC's announcements, you would be bearish. More in a fundamental, looking for an entry. You could have taken this flag. You're looking for an entry today. Wait for a break of yesterday's high. High was 84.56. We're right about there if you're looking for an entry today. Let's see if we could see what a target would be. They want a $1.20 on this thing. But I'm thinking 100 might be good. I mean, I'd probably go my one off right at this Keltner. So we're bullish on oil. RTY, oh, that's the Russell. Gasoline grinding its way up. Look at that. breaking highs. That's going to be a pretty good support at 261. And then I'm probably looking for 282. Let's hope not, man. The working man needs that that easement. Nat gas is floating down, but that's because it's a residual of our fracking. Still looking bearish on the daily. I don't think anybody's trading it, but I mean, it'd be nice if it eases on down for the next couple of months when we start filling our propane tanks. So I'm bearish on nat gas. It's interesting that they're diverting. Bonds. Yeah, we expected a retrace on bonds. How far they'll go is the question, you know? I guess we're really not going to be able to tell what the trading psychology is going to be until we get the non-farm. But it's already broken the 23. Next move is the 33%, then the 38.2. I think that 38.2%, 132 and 3/30 seconds, is a pretty decent retrace. And hopefully that will get me into more TBT. I'm looking for it at 28.5. I'm feeling that's the number. I don't even see where I got it listed here. I don't. I must have it here. Come on, man. I know I'm watching it. Oh, okay. Let's roll that down. There it is. Oh, it's right up there on the screen. Ha ha ha. So, yeah. About 3 points I needed to pull back. That looks kind of difficult. I'm going to have to probably change my assessment. We'll see how it behaves. It's coming off of that Keltner. If I change my target, I'll talk to you guys about it. Gold. Yeah, just grinding its way up. It's gaining some interest. I told you I'm looking for a little bit of chatter about gold as a backstop to currencies, to control currencies, going back to that standard. I mean, that's going to be hard pressed, but maybe just pegging currencies to gold without them being gold receipts might do the trick. And if that's the case, if they start thinking in those fashions, gold should be good for about $4,000. If you consider the difference, the value of the currency to gold back when they decoupled it. So I'm thinking the conversation is going to get it up to 2,500. I'm just wondering if there's a pullback on it. And one of the regulars on the channel, I think it was Mr. Miguel, started talking about gold. So the stock gods are favoring. It's consolidating up a little bit. Still, the momentum looks bearish on the monthlies. Weeklies still look bearish. You could wait for a confirmation on the weeklies before you start going long. I think that would be a good bet. Probably still get a good price. Mm, 61% retrace. That might have been the spot. Maybe we could revisit that. If I see that again, I'll probably get involved. Well, that would be one reason I would get involved. And I'll keep my eye on it and see if it motivates me otherwise, or additionally. So what else are we looking at, man? What are we looking at? Oh, you know what we're looking at? We're looking at Amazon. Well, we know these bad boys are going with the market. Although, it wasn't the composite that did its business. It was really the Dow that dragged everything up. But for the daily, we got this consolidation. I'm still feeling rather bearish on it. So I'm thinking it's going to be a wait on the market. There's a little enthusiasm. I don't know what it is. I think people are just closing shorts before the report. But it looks like tech is going to be somewhat of a drag. Look, Tesla pulling down. That's going to be a wait on the S&P. I don't think I'm going to be trading much today because I'm getting conflicting arguments here. I mean, everybody's up today, but everybody's up in the pre, but it's just feeling bearish. Apple. Apple's almost there. Got 5 points to go in Apple. It's already up 3. We got 2 points during the day. I'm thinking. We'll see if my ideas work out. See, that's what stop losses are about. Because when your ideas don't work out, see, Google's got another buck for the day. I'm wondering, we might get a pop and a pullback. But well, that's going to be in fucking, excuse me. That's going to be in high tech. So AT&T, we were talking about AT&T. I was buying it around 15.75, and I got in, came back down, bought a little bit more. I haven't gotten my whole position yet, but I got a good piece, which is nice. And I'm looking at it, and yay, I'm up a little bit. But the reality is, I don't think the party's over, and I think things are pulling back aggressively. So anyway, keep some cash, man. Keep some cash. I think you're going to have an opportunity to get involved. This is a bear rally. Too many geopolitical issues, just changing fundamentals, a lot of the disposable income vehicles are getting beat up, like real estate investments, things like that. So I think the pain's coming. And what I'm expecting the Feds to start easing up on their raising. I don't think they're going to stop raising, but I think they're going to slow down. Like we should see a 50 basis point. Then the question is going to come in about them pivoting and they're being weak and everything, and all of this noise is superficial. It's all bullshit. Like, the Feds moved at the right time. You know what I mean? There's nothing they could have done that would have kept us from this environment. And when inflation first hit us, it was pandemic induced. And then there was a pile-on. First of all, you had a lot of gouging, people holding back supplies in order to do this. And profit margins skyrocketing because they gave them an opportunity to raise prices. If you look at it, the only people who took a beating on this recession were individuals. Corporate profits are still high, profit margins are still high. Now they're starting their layoffs and their cutbacks and shit like that. And they're going to ease into this recession. And the only people with a soft landing are going to be corporations. But the individual is going to get hurt. Production's going to slow down. People are going to get laid off. And then things are going to turn around. So I don't think the Fed could have done anything to change it. And then, this war, the sanctions. I mean, these idiots should have started alleviating the tariffs, but they didn't do that. It's just, the abuse of the general population, if you ask me. So anyway, all the noise about the mistakes the Fed make and everything like that, it's just noise that moves the market, psychologically moves the market. And you just got to try to look through the noise and figure out where you want to be down the road. So again, I think the Feds are going to ease up a little bit, but I think they're going to move up to the interest rate that they want. The market's going to overreact to all of this, which is going to bring it down considerably, which is going to give the individual an opportunity to buy good stuff cheap. And that's what you want, man. You want to buy good stuff cheap. So, I'd be locking in some profits around here. And then start looking to buy stuff you like back cheaper. Maybe a couple of years, but now's the time. I'm thinking 3,300 is a good number on the S&P. Every time it moves up, I do the same thing everybody else does. You capitulate or waver. What's going on here? Oh, I'm on a 30-minute chart. That's what's going on here. Who keeps moving my damn charts? See, here's my 33. I put that in probably March. Yeah, I'd say around March I probably put that bad boy in. So this solid line is where I think the bottom is, which would make this solid line the midline because we know where the top is. So this would be my midline. I'm trying to figure out the channel that we're going to go into because I'm of the opinion that we're going to make our bottom, get in a channel, and flatten out for a few years. I think that the euphoric market rises are over, and this really, I mean, this is 16. Let's see if we can get more on the screen. No, this goes back. I mean, here's 13, or 12 right here, and this is all about quantitative easing. This move right here. And actually, if we go to a monthly and look at it, let's expand that a little bit. So this is what the market does in the great. In just a regular market. This is the financial debacle, right? So just a normal market moving along from 2003, we were at 939 to 1497. Go ahead, back up, man. What do you want from me? Oh, you know what? Let's get rid of you. So, yeah, the markets are relatively conservative, right? And then the quantitative easing sets in. So here's our debacle, the pullback, very aggressive. But in that time span that we just looked at, the market only moved 500 points, It was like maybe a 50% increase over the span of 2 or 3 years. So here's quantitative easing, bang, 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 and then here's where this is the pandemic, and then they started easing additionally, which is all they're taking out of the market at the moment. This is the only easing aspect they're taking out of the market. So look how aggressive that is. Ridiculous, absurd. So I think we're going to come into a time of stabilization. And these trend lines right here, this is like the natural trend before they even started the pandemic easing. The Fed support for the market from the pandemic. So this channel right here would represent, if we took that action out, where we would be trading, right? So this would be our progression. We probably, right now, the market should be 37.97 based on that philosophy. So you're going to trade back and forth, back and forth, back and forth. Geopolitical issues, I think we're going to tag out on this, but ultimately we may get back into this channel. And then when they start taking the initial easing effect out, I think we're just going to flatten out. Very slow grind. Probably hover around the slower line and trend our way up. Anyway, all this remains to be seen, and I'm just hanging out with you in the morning and making a really long and boring video. So you know what? Hey, subscribe, hit the bell, hit the like. Join me at 9 a.m. for some more of my babble, and let's see if we can make a few bucks together.